Welcome to the Cultivating Success podcast. Jeff Sofer and Jonathan Wolfson are brothers and business partners of the top landscaping company, Nature's Experts. Nature's Experts is home to 6 companies that cater to all your outdoor needs. To learn more about Jeff and Jonathan, simply visit us at www.naturesexperts.com. On the podcast, Jeff and Jonathan bring together other business owners and entrepreneurs to share with you how they developed a prosperous company and how you can too. You will gain insights and meaningful advice on creating the building blocks to success and longevity in the entrepreneurial realm. And now, here are your hosts, Jeff Sofer and Jonathan Wolfson.
Tal, welcome to the Cultivating Success podcast. We're excited to have you here and to have a deep dive into commercial real estate and all of the different facets of it that you cover, actually. So thanks for coming and joining us here.
Welcome.
Thank you so much for having me.
So just to dive right into it, Tal is involved with commercial real estate, which I think that is people really don't understand the different facets of really what you can do in commercial real estate, because there really is a difference between a commercial broker and a residential broker. So Tal, tell us a little bit about yourself and tell us about the kind of different commercial real estate that you're involved in.
Sure. So I work for a company called Newmark, which is a publicly traded company. It's backed by Cantor Fitzgerald out of New York. And, we are strictly commercial real estate. And we also have a financing department as well that handles all the financing for us on the deals that we do. My team here in South Florida, we specialize in the sale of large multifamily properties throughout the South Florida market. We've been the number one team for the last couple of years in South Florida for deals $25 million and up, which is our specialty. And we sell a wide range of different kind of deals. We sell brand new deals that are straight from the developer. We sell older deals, 70s and 80s and even 90s construction, where we categorize those as added value deals. When we sell it to a new buyer, they'll go.
But it's all residential, though.
It's 100% multifamily residential.
Okay, so people can understand it's not commercial, like where it's like commercial shopping centers or warehouses or anything like that. This is residential,
commercial sector,
commercial buildings. Okay.
Real estate, you have the multifamily, which we specialize in. Obviously, you have other groups that specialize in, office buildings and shopping centers and triple net. So it's really like a niche, and it's completely different than residential real estate. When I buy and sold my personal homes, I hired a realtor to sell it, and the way I categorize it is that if you broke your leg, you'd go to someone who specializes in that field. You wouldn't go to an eye doctor, for instance, or a general practice.
Well,
doctor.
Yeah, but
really
to John's point, he was saying at the beginning, a lot of people don't really understand the difference between a residential, broker and a commercial broker. But the thing is, they might be confused since you do residential, but yet it's considered commercial. So maybe you could explain that a little.
Correct. Yeah. So the properties that we sell are large, apartment complexes where, for instance, if it's a 300 unit community, it's 300, units within that community, 300 tenants, and we sell to a large variety of clients, whether they're institutional, REITs, which are publicly traded companies, and then just private individuals that are high well net worth, because like I said, the minimum usually deals that we do are right around $20-25 million and up.
So are there a lot of developers that you have relationships with that they want you to represent them to sell their property? Yeah.
I mean, a lot of deals that we sell are being the newer deals. We have those developers that they're categorized as merchant builders, meaning that they'll build the communities, and then once they get the property stabilized, they'll sell them off.
Why do you think that the real estate developers wouldn't broker them themselves? Because they're selling something that's so expensive, so valuable, and they're selling it for such a big price. Why would they farm it out to you guys instead of them just doing that themselves?
Probably conflict of interest. A lot of times it's not just their money; it's other partners is involved as well. So they want to make sure that they have a true process. We're a national firm, so all the groups know our company and know who we are.
Well, I think, Jeff, when you're dealing with multifamily and commercial, there's different markets that are most advantageous for your cash. So South Florida isn't always the best place to park your money for multifamily. You might take longer for particular deals to unfold here because of zoning, because of different options of trying to buy different land together. And I feel like that would be the reason, I think, where, you don't want to do it all in-house, because you want experts, like I think any industry, you're wanting experts in each area. You're definitely a commercial, multifamily, residential expert.
But these are rental buildings.
Right, but that's you wouldn't be the same thing if you're in Houston, Texas. It's a different market, you know.
But so you're here in South Florida. Don't you run out of properties if that's just your niche and you just stick within that niche? I mean, how is there always stuff for sale in just this area?
You'd be surprised how many apartment complexes there are currently. Right now, we have about 12 or 13 deals, actually listed that we're going to be marketing over the next, 30 days. We've done about $4 billion worth of business over the last couple of years consistently.
In South Florida?
Strictly in South Florida. So
only
multifamily communities. And, we're part of a big team also, not only our South Florida team, but we have an office in Orlando that does the same thing, Tampa. That does the same
thing. But I'm talking about in this geographic area. You had kept mentioning you were in South Florida. So I was just thinking to myself, I mean, how many can there be that are for sale? I know there's a lot of apartment communities, but how many could actually be for sale at one time?
Well, I'll tell you, just last year alone, I'll pull up right now. I'll tell you exactly.
And that's just and South Florida is considered the Tri-County area. Miami-Dade.
So we handle South Florida along with Fort Myers and Naples. So
okay,
if you take all our deals that we did last year.
So then it's not just Miami-Dade, Broward, and Palm Beach.
Yeah. So just last year alone, we did 57 deals.
Okay, but that's including the Fort Myers area, like you were saying. Yeah. That's considered South Florida also.
We did 5 deals in Fort Myers and Naples last year out of that 57. The rest
wow. So 52 of them were done in the Tri-County area here.
And then in 2021, we did a total of
I feel like that's a lot, John. They're not the only ones selling.
Interesting. You know
what I mean?
Well, to me, I think that in general, especially with real estate in general and multifamily, there is a different turnover and life cycle because people at a certain point, you use up all of your goodwill in the property,
right?
And it appreciates, and you have to figure out ways where you can maximize your cash. So I would assume in the multifamily arena, I would think if you buy a $25 million property or asset and you have it for 10 years, right? You eventually probably suck out all of the different depreciation. And then you're like, all right, well, what can I do next with it? It's appreciated, X amount of dollars.
20%.
And, can I sell this for more than I bought it for, cash out, roll it into another investment, and also have additional depreciation? I feel like, is that a normal process people follow?
Is that the normal model?
Not so much really here in South Florida. I mean, maybe other parts of the country, but really in South Florida, the average hold for these properties 2 to 4 years, maybe 5 years.
That's it. Wow.
And why is that?
Because the rental market here in South Florida is the hottest in the country right now. Especially
why sell then?
Especially since 2020. So
But Tal, why sell? To John's question, why sell then?
Because they're hitting their numbers, and they're hitting their. So a lot of these companies, they have an exit strategy. They're saying, listen, we're going to hold this property until it hits X amount of dollars. And a lot of times, because the rental market is so strong here in South Florida, they're hitting those parameters and target numbers
quicker than they expect.
As a result, I mean, I'll give you 2 different examples. For instance, we have a deal up in West Palm Beach, it's 300 units, and we sold that property 4 times in the last 7 years.
Oh, wow.
Wow.
Each
so what did it start at?
Yeah, how much?
What did it start at for sale?
Yeah, we want to know.
All right, I will tell you. So first sold the property in 2018, 48.5 million.
48.5.
Okay. And then we sold it again in 2020 for 56,225,000.
Okay.
Actually, I missed
Not bad, right? Not a bad 2 years work for anybody.
I didn't realize it, but in 2016, we sold the property for 36,350,000.
Wow.
2018, so 2 years later.
Wait a minute. So in 4 years, you went up $20 million.
Yep.
So 20 million.
Well, no, it went up 10 and 10.
Yeah, but that's what I'm saying. 4 years.
The first one was
that's nothing.
The first one was 2016 for 36,350,000, and then 2 years later, it sold for 48.5.
Then 56.
And then 2 years later after that, it traded for
2020 was 56 million, you said.
Exactly. Yeah. So, I don't, broker deals. I don't personally invest in properties here in South Florida. I invest in properties outside of South Florida.
Why is that?
Just because of conflict of interest. I don't want clients to think that, I'm taking a deal for them in South Florida. So a few years ago, I teamed up with a former client of mine, and we ended up buying some properties up in Gainesville, Florida. And we bought them, we bought 2 properties together. We bought them for $29 million, and then we sold it at the end of last year for 51.
Oh my God, that's unbelievable.
Amazing.
And now we're purchasing another deal. We're closing in a couple of weeks, also in Gainesville. 312 units, not too far from there. So we're starting the process over again.
So what's the reason to start the process over again if rents are continuing to climb?
So
I think that's a good question for anybody, whether you have a duplex.
For a lot of clients, when they buy these properties, they do a big added value. They'll go in, they'll upgrade the units, obviously in return increases the rents. And so when they do that, they take out a bridge loan. And usually the bridge loans are for anywhere from 2 to 3 years. And so after they do their renovations and upgrade the units and increase the rents, after the bridge loan is due in 2 to 3 years, they'll look at two options. They'll look at a refinancing option. How much are they going to be able to take out if they refinance the property? And then they'll call us and say, hey, if you guys are going to sell the property, how much do you think the property would be worth? So they look at two options. And just like I did on mine, in Gainesville, we did the exact same thing. We did a major renovation over there, and
interest is high, sell, and then buy something else.
Amazing.
Interest is low, refinance, and maybe keep it or pull money out at that point.
What's your fee structure? What percentage do you charge?
Yeah, we just went under contract on a deal in North Miami Beach, and it's an older property, off 167th Street. It's 199 apartments. They did a renovation program over there where their renovations are now getting $400 to $500 more in rent than the previous tenants were getting, when they were in there on a non-renovated unit. And that's what you see on here in South Florida, because 2020, everyone came down to South Florida. The rental market just skyrocketed. So people on renewals, if they wanted to stay in their same apartment, they had to pay an additional $200, $300, $400 more in rent. If they decided to move out, they put a new tenant in there for another $400 to $500 more in rent, and that was consistent since 2020. So we're going on.
Is it still trending that way now? Now I feel like
we saw huge, massive rent growth during that period of time, and now it's starting to level off. We're still seeing anywhere from 5 to 10% increases in rents, but not the 30% or 40% that we're seeing for the last 3 years.
What's your fee structure?
It depends on deals. It's all negotiable. We have a lot of clients that we do a lot of business with, so we'll work with them on it. But usually the average, on a $50 million deal is usually anywhere from 75% or 1%.
Did you say 75%? I didn't hear what you said.
75 basis points. I'm sorry, 75 basis points. So 0.75%.
Yeah. So it's really 0.75.
Yeah.
That's average.
Average.
And what will you guys go down to? Like you said, if you have a good client, you'd go down. So what would you go down to?
We do like a base fee, and then we'll do an incentivized fee that we get a certain percentage over a certain pricing. So, a lot of times we're hitting, because it's so competitive down here. On the deal,
what will you go down to though?
There's no minimum. Usually our minimum fee, we won't go anything less than, 300, 350,000, for the
yeah, it's more, I would assume it's more dollar generated, because if it's sold quick and it's, X amount of 1,000 units, obviously, And
everything's very competitive down here. On the deal I just told you about that we just went under agreement on, we had 17 groups come in toward the property, and we ended up with just under 10 offers within a 3-week period.
How long ago was that?
Wow.
Just now. We just went under agreement last Friday.
And yet, so things like that are hot, but yet you go into a residential world and you talk about, some of these apartments that are selling, or some of these apartments that are for sale, condos, and they're in attractive areas. They're say $2, $3, $4 million. They're having a hard time selling them.
Yeah, we saw a slowdown also when interest rates went up. We didn't see.
So you're saying that you would have had 20 or 30 offers when the interest rates were lower?
No, I think what happened was, just to give you an insight, we beat our 2021 numbers in the first half of 2022, and then the second half of 2022 is really where everything was kind of slowed down because of the increase in the interest rates. Now, so many people being on the sidelines for so long, they're
jumping back in. Right?
Yeah, so now they're coming back into the game again, knowing that this is the new norm that we're going to be.
Well, the market's stable, but it's at a high interest rate.
Yeah, exactly.
Interesting. Definitely is an interesting whole category in general. Do you feel like it's something that people should, like if you're someone who's out there and you're looking to be an investor, right? And you like multifamily, what do you think the benefit is? So you're dealing with ultra high net worth, very wealthy groups, that are looking to buy and invest. Like you said, a 25 plus, $1 million property. So let's take someone who's a little bit more in the normal box, right? Where they have, let's say they have a handful of duplexes. Maybe they own something that's where, has 10 units also too. What is the benefit now for someone in that particular category who has $15 million in assets, right? In different, multifamily assets. Should it be a goal of theirs to keep getting up to higher doors? Or what do you think? What's your opinion, I guess, because they're two different marketable areas and they both are obviously in multifamily commercial, but they're two different options as far as growing net worth and value.
Yeah, I mean, each one has their own philosophy. You have some people that we work with that are just long-term holders. They'll buy a property and just keep it in there forever, and then when it's time, they'll refinance it, take money out, and maybe use that money to buy additional properties. I mean, the seller for the property that I just told you about in North Miami Beach, we've been doing business together for over 20 years, and the very first deal that we did together was a small $1 million deal, and now that owner of that property is one of the largest multifamily private owners in South Florida.
So do most of the buyers put down what percentage cash?
Before 6 months ago, people were putting down 25 to 30%. Now people are putting more like 35 to 40% down.
Got it.
Because of the debt market changing.
And do you do the same thing? You said that you had bought something. So you and a couple of other investors.
Yeah, just one other partner. Yeah, we had one partner, and then we had one equity partner on our deal.
Right. And so you and your partners have different percentage of ownership, or you all have equal percentage of ownership?
Partners. Yeah, my partner and I are 50-50.
So you said that you sold something for, what did you say? You said you sold it for how much?
We sold it for 51.
You sold it for 51, but you bought it for 20. What did you say? Bought it for 29. So you and two partners bought it for 29 million.
Mm-hmm.
Okay. So then what did you guys put down? 20%?
Yeah. At the time we put down 20% on the deal.
So you put down $6 million. So you put in so you put $2 million in. Each of those other guys put $2 million in a piece. Yes.
Yep.
And so you park your $2 million there, and then how many years later?
So we were getting, during that time we were getting good cash flow, and then the rental market increased significantly during that time, and we finished our renovations. So we looked at our options as far as either a sale or refinancing. We took both options. The sale option was significantly higher at the time.
Yeah, I would say so.
And so everyone just agreed, let's just take the money and run and move it towards something else. And that's what we did.
And so
is it a weird, so I would think I'm in your position, right? Which is a great position to be in, right? But you're thinking to yourself, all right, I bought this asset for 29, but now, and I'm going to sell it for this. And now I'm going to, you upgrade, of course, typically is what people do, right? But I'm going to upgrade, but I'm going to quote overpay for this new property that's probably the same caliber as what you bought X amount of years ago. And you have to go through a similar kind of process. To me, is that like a hard psychological shift kind of?
No, because in our situation, we sold a property that was built in the late 60s. So it was an older product type.
Oh, wow. And
then the property that we're buying right now is late 90s construction. So it has, much nicer units, larger units, much nicer amenities.
Not strange, weird closets and weird bathrooms.
And we found, kind of a mismanaged property. So it has a very, very high vacancy. And we're actually buying it cheaper than the properties that we sold.
And so when you bought the property, for $29 million,
yeah.
What after you guys put in your $6 million, so obviously then there's $23 million that you're financing. Mm-hmm. So was there positive cash flow every month after the debt service was paid, after all the expenses were paid? And was it a lot of hold on, I'd like you to answer the full question because I have a couple looped together. So there was positive cash flow, and then was there such a substantial amount of positive cash flow that you could have like just had this and doing this on your own and lived off of that? Or was it like kind of a lean amount of money that you just knew and you were hoping and betting that like, a few years later or several years later, you'd be able to sell it for more and, make some more profits out of it?
Yeah. I mean, we go into the deals seeing what our cash flow is going to be every month after we pay all our expenses, after we pay, the debt and everything. So, for this particular situation, we had a very nice cash flow, for the 2 years going in. Obviously, they increased every month because we were going in and upgrading the units, when the tenants vacated, and then as a result, increased the rent. So whatever we were at our base, every month after that, we kind of had an increased income coming in. So
what percentage of like a return on your investment did you get?
You were getting about
$2 million. How much did you get?
You were getting about 10% on our money.
So you personally would get like $200,000 a year from it.
Correct.
So you got like a steal, I would say.
Yeah, I mean, we knew.
I mean, you got $200,000 a year each, and then you sold it for $20 million more than you bought it for. That's like amazing. Congratulations.
Yeah, it was a phenomenal deal, and being in the market, we know where deals are. The seller, owned it for 30 plus years, and someone
approached to get out.
Yeah, he wanted to get out. His kids he was older and retiring, and his kids didn't want to take over the deal. And we came in and we showed him the money. We came in and said, here's $1 million.
And obviously, you didn't have too smart of a seller.
Right. Yeah, he was represented by us. It was another realtor, represented him.
He wasn't too swift either.
Yeah, exactly. So we took advantage. Yeah, it was
but deals like that. So should people out there think that deals like that are like around every street corner, or that was very rare?
That was rare, but that was 2 years ago, and we kind of buy anything else till now. So we see plenty of deals that are brought to our attention.
So what did you do with your money and your profits that you took off the table? What did you do with those while you were waiting for something else? Do you just stick them in the bank, or do you put them in another investment?
No, him and I teamed up with another developer, and we built large single family homes in Wellington with barns and stalls. We're in the horse business with my wife and daughter, riding consistently. So we're up in Wellington all the time.
Oh, nice.
Opportunity of a distressed house in Wellington near the equestrian center over there. And we put a good amount of money into that project. And, it's a single family home with 25 stalls. So, we put part of that into that. And then the other part is going into the new Gainesville deal.
Wonderful.
By the way, that's awesome. So by the way, congratulations for that. I think it's absolutely amazing.
Yeah.
So let's go to now we're in 2023.
Yeah.
Right? So that particularly, you had a unique seller, right? Which is more common than you think. You had a unique seller. So what would be a level of expectation you think in this day and age now, where we're at now, for a level of expectation and level of return? Because, I would say as a layman, I would think to myself, all right, so apartments typically are geared towards working class people. They're not really geared towards families. I would think that families typically have a little bit higher income than, individuals who are living in apartments typically. And how much can someone actually pay in rent? And especially in South Florida here, it definitely has pushed that envelope to how much more can you really increase, period. Even if it was 3% a year, if you're already paying for a one bedroom, $1,700, how much higher can it go really?
That's the big question that's constantly being, thrown out there. How much more room are these able to increase by? And, 3 years ago, people didn't think that they would get to even close to the level that we're at today. But I think it's a matter
now we're talking about changing digits. So changing digits is a little bit different. So going from 1,100 to 1,500 to 1,700, you're still 1,000.
Yeah.
So changing digits, I feel like that's a whole nother.
What do you mean? Like going to 2,000? Yeah.
Going to 2,000.
The first digit changes.
Is to be on right now. Even the property that I was telling you about in North Miami Beach, it's an older property over there in a decent location, but the rents are just incredible over there. I mean, they're renting their one bedrooms between 1,800 and 1,900. They're renting their 2-bedroom, 2-bath units for over 2,300. And then they have 3 bedrooms over there that they're getting over $2,700 a month for.
Listen, in Boca, it's worse. In East Boca, there's a 1-bedroom apartment. I know a particular apartment building that's in a great location downtown. It's $2,800 a month for a 1-bedroom apartment.
Yeah.
It's amazing.
Well, yeah.
They're making a fortune. It's amazing.
It's hurting a lot of the families in the service industry, for instance, that, how much more can and it's going up after a year. It goes up. Constantly going up. And a landlord, for instance, because we represent obviously all these landlords, they have a waiting list. I mean, that property in North Miami Beach, it's 199 apartments. They don't have a vacancy available until the end of February now.
Wow. Let's switch gears a little bit. Let's switch gears to how would someone want to get into your particular industry? Say, I am looking to be in commercial real estate, and regular commercial real estate can be very, cutthroat, and it's definitely a niche. It's difficult to get into. There's all different subcategories of the commercial industry. There's just the industrial, there's industrial and free development, there's land development, there's what you do. So specifically, let's talk about what you do. How would somebody really, if they wanted to get into commercial real estate, into your niche, how would they really get into it?
So I'll tell you how, when I first started, 20 plus years ago, I was just coming out of college. I didn't know what I was going to do. I was planning on going to law school, and then got involved in commercial real estate up in Connecticut, where I'm originally from, and then came down here and interviewed with all the major companies. And I was with a company called Marcus Millichap.
Yes, we know them very well. Yep.
When I first started, I was there for 16 years. And when I first started, I was a research manager over there. So I was in charge of all the research that was going on within the market. And then on the weekends, I'd drive all the different properties, and, we didn't have the cell phones with cameras on at the time, but I'd take pictures of every single property, within the market. And, the following week, I, get in touch with those owners and try to get in front of them. And it's definitely not an easy business. It's not an overnight business. I think nowadays, if you join part of a team and you start off as an analyst, and you really learn the industry, you learn the markets, you learn how to underwrite the deals. And it's an opportunity to really get your foot in the door that way, and then slowly, gradually, becoming a broker and producer.
So would you say that, let's just say you're getting into real estate in general, right? You can pick your lanes, right? You can pick your lane of going into residential. So I would think that residential real estate, particularly, if you stick with it, obviously you can get a return on your time quicker, right? As far as the amount of money you make. But would you say there's more of a guarantee in staying in your lane long-term to be making more money?
I think so. I think it's the same thing you can do for any field that you specialize in. The key is specializing in a certain field and dominating that field, in that market, whether it's, commercial real estate for multifamily or office buildings or residential realtor. I have some very close friends that are realtors with single family homes, and they dominate their markets, and they're phenomenal at what they do. And like I said, I've used them to sell my home when we were moving. And then when we bought a home, we hired a realtor to represent us. And just because we're not part of MLS, we don't know anything about that. And, I wanted, someone to represent me, just like, all these clients and developers, want us to represent them on their sales.
So your firm really is more of a brokerage of knowing the right people to connect to be able to buy the property.
100%.
So
yeah.
It's not the same as, buying something and you slap it up online. It's knowing who to call to bring to the table.
Yeah, we are a massive database with thousands and thousands of people that we, showcase these deals to, right when they're ready to be marketed. And then we follow up with a lot of them. We know the kind of buyers that are buying, whether it's a newer deal, whether it's an added value deal. So those are kind of groups that we, contact immediately once we have our new assignments.
So my question that I was going to ask was, you mentioned that it's an up and down thing at the beginning of the conversation, at the beginning of the podcast. You said that, I think it's not the easiest business, or you said something about it being up and down.
Yeah.
Correct?
Yep.
That's a yes, right?
Yes.
So if that's the case, how is it really up and down? I know that every business goes through, different ebbs and flows, but you want to explain, when is it not good?
Well, listen, not every deal that you take out to market that you spend, you don't get paid until the property closes.
Correct. Well, that's any kind of real estate that's based on commission. Obviously, that's the case. So besides that, which is the standard answer for any real estate agent, commercial or residential, what else is there that's not good that people might?
He mentioned earlier that in 22, they sold in the first half of the year, they sold more than they did in 21 in the first half of the year.
But was 21 considered well, hold on a second, John. But was 21 considered a bad year?
No, 21 was considered
okay.
A
So that doesn't have anything to do with my question.
So, but then he said the second half, because interest rates went up, the market really cooled off, and then now we're into 23. Investors came out because they were wanting to see what happened in the market, and now they're ready to re-enter. That's a wave, because you think that like you're way up here.
No, that's an ebb and flow. That's what I was saying. I want to know if what John is saying, is that what you're referring to? Or over the years, over the 20 years, are there other things? These are standard things with real estate that everybody knows, which is that there's ups and downs. But you specifically said in the beginning, it's not easy, or there's ups and downs. What do you mean by that? Just the standard things in real estate, or is there other things?
Yeah, there's a lot of factors going in. I mean, you sometimes lose deals because during inspections and due diligence with things that are found. Other times, for instance, on a lot of these big deals, these clients have equity partners. Sometimes their equity partner backs out of the deal, and they have to drop it at that time.
Yeah, I completely understand. These are standard things that any real estate deal deals with. I just was curious to see if there was more to it in your particular niche. Like John was mentioning, if they want to get into your niche. So if they do want to get into it, what other things do they have to consider? And really, by listening to you, it isn't anything else that would be in any sort of real estate. You know what I mean? All of it
Not exactly,
applies.
no.
Why?
What do you mean?
Well, because every deal, the buyer backs out, the seller backs out, inspection doesn't go well, they find a problem, financing fails. These are all the things that he's saying. So in the beginning, I thought he was saying like there's other nuances that go along with your particular niche that are maybe bad. But it's just any kind of real estate deals with all of those sorts of things.
Any of that kind, yeah, exactly. And you're going to go from ups and downs, getting a high of, getting a new deal and then putting it under contract, and then you get the low of they lost their equity partner, the financing coming in.
Yeah, I mean, you were saying like, if anyone wants to go into his line of work, what things should they be considered, or what should they do? So what I was trying to ask is there anything outside the realm of regular real estate issues that go on with any sort of real estate deal, whatever form of real estate you're in? Is there anything else? Because he had made the comment earlier that, it was ups and downs, but it is just a normal, like there is with any kind of real estate. I guess like maybe the thing is it that, like to John's point again, if someone did decide to go into the niche that you're in, what's the benefit that you really can, quote, get rich quicker?
No,
I think it's longer, but you have a better chance because you're going to be dealing with larger deals.
Okay.
So he had to start off doing analysis work of understanding why these are good deals for people.
Right.
Because you're dealing with lots and lots and lots of money.
Yeah.
And if you're not able to really bring people great opportunities,
they're
not going to ever come back to you.
Right. So the stress really is finding the good deals that cash flow and make sense.
Yeah, exactly. And because usually what happens is the seller will contact us, or we'll contact a client, and they'll say, listen, we're open to possibly selling the property, and we'll put together an analysis for them. Usually, that seller will go and get maybe 2 or 3 other opinion and values from other companies and make it as a competition. And we have to go in and kind of pitch ourselves, why we're the right for the property, just like a residential or any other business that you're always going to compete with other companies, on the business.
Where are you located in South Florida?
So our office is in Boca Raton.
Okay.
I live in Delray Beach.
Nice. Off of Glades?
Our office is off Yamato and Congress.
Oh, great. Okay.
Yeah.
Awesome. How long have you been in that location?
About 4 or 5 years.
And why Boca? Is there a specific reason, or just that's where you guys ended up?
We're just parked at.
There's a place to park. Yeah.
Yeah. I live in Delray.
A place to park.
I live up in West Palm.
We certainly didn't want to go south where we had to sit in bumper to bumper traffic to get to work. So we chose up here.
It's near 95.
Yeah.
This
was great. I learned a lot from this conversation.
I appreciate you guys having me, and always available if there's any questions or anything that you guys need.
I did too. And I really appreciate you sharing all of your knowledge and getting so detailed in your industry, because, the goal of this podcast is to really help open up people's minds, ideas, get their creative juices going to what they actually want to achieve, with their life particularly. Because like you mentioned even earlier about the person that you just sold a property to not too long ago, you knew him from 20 years ago and you sold him $1 million property. And then look what he did now.
Right.
And that's the kind of strategic value of mentorship and people like yourself that you need to be able to connect with and understand with, to have these conversations of knowing where it actually can go. Because you can go from a $1 million property to, what was his?
This current one that we're selling for him is $51 million.
It's cultivated success.
I would say so.
Yeah.
Thank you for joining us very much. If you would, please let everyone know how they can reach out to you and get in touch with you should they have any questions.
So email is always the best. It's Tal, Tal.Frydman, Frydman at nmrk.com, which is for Newmark. And that's always the best way to reach me.
Fantastic. Thanks again for joining us today. We appreciate it. And we look forward to meeting up with you again soon and seeing where you are.
Absolutely. Thanks, guys.
You got it.
This has been the Cultivating Success podcast with Jeff Sofer and Jonathan Wolfson. To learn more about Jeff and Jonathan and their businesses, visit www.naturesexperts.com.